Hello everyone, it's Wednesday, February 27th. This is Liam McMahon with your daily moving average video. Going to be looking at some of the price action today and talk about some potential resistance areas we have upcoming, specifically on the commodity dollar crosses, so Kiwi dollar, Aussie dollar, and dollar CAD. So please take a moment to pause the recording and read our risk disclaimer, which should now be on your screen, and then we will get started. Alright, so we're going to start with Kiwi dollar. So we've had this major breakdown on Kiwi from its highs above 82.20 to its lows here today, actually, around 82.25. So a fairly significant drop that we've begun to retrace a little bit. We're approaching this potential neckline area here, right, trading currently right around 83.25 or so, which will certainly be significant resistance. The other thing we have to keep in mind are the fib levels here. So this 38.2 of the larger decline comes in just above the neckline and right at the 50-period EMA on this 4-hour chart. And then I'm gonna skip this middle one because this is a more dramatic move lower. This is the full move. This is sort of just an intermediary, and this is the most recent impulsive sell-off. So I'm going to draw it from this move down. And you can see that the 618 is roughly in the same area as the 38.2 of this move. So we have a little bit of confluence going on just above this trend line, which is interesting. So what we could see is a pop above to shake out the early shorts before another move lower. But definitely keep an eye here on this 50-period EMA at 83.42 going into later tonight and then early tomorrow's trade. It should prove to be a big level. It might be a good area to start to eye up some shorts should we crawl that high. Keep in mind that this is viewed as a head and shoulders, which it's a terrifically ugly one if so. The measured move still calls for below 81.50 as long as this area stays intact. Above this 50, we have double moving average confluence here on 83.60. I would also keep an eye on that level as well. Pound Kiwi, I said everything I have to say about Pound Kiwi earlier today in a video I did that's in the chart of the day section that you can find on the site, also on our YouTube and Facebook. I would recommend that you check that out, talk about a couple of potential setups there. I'm going to jump over to Aussie dollar. Aussie dollar less clean now than Kiwi. We had a nice break below this range area. Let's zoom out so you can see where these lines came from. Then we popped down into this resistance area. It couldn't break through this resistance area this morning. Tried several times and failed, which should have been good warning that we're going to squeeze higher. It's now testing the first moving average that it encounters here on the 4-hour chart, this 50 EMA, with a trend line right above it. Would be keeping an eye on this area for a potential reversal. As again, if we hop out to the daily chart, Aussie is still choppy near the end of its, near the bottom sort of its recent range. But you know, the most recent strong move has been down, so I would keep an eye for potential reversals. But certainly be aware that we may be starting another leg higher, targeting above the 1055 mark. From a fundamental perspective, that's harder to swallow, as certainly the RBA would be extremely displeased should the Aussie make another 300 pip move run higher. On the daily chart, this 200-day EMA is definitely something to watch here around 103.50 going forward, probably next week if we're going to test that at all. Dollar CAD. So we're going to start with the daily chart of dollar CAD. We've had this great run up, very consistent, just march higher. 1, 2, 3, 4, 5, 6, 7 days of 7 green candles in a row. Then we put in this topping sort of doji here, which should have set off some alarm bells on the 26th of February. Then the 27th of February, we saw some follow through, and now so far here early on the 28th in February, also seeing some follow through. Price starting to dip back below the 70 on the RSI, which would give a little bit more downside momentum. We have an unfilled gap here at 102 that we should keep in mind, and also just look at the significant distance we have between price and the 3 key moving averages. If we zoom out, you can see, CAD has not deviated that far from its moving averages, really in a sense back here in June, and you can see it prompted a sell-off. Sort of pound dollar, in the opposite form. Talked about how far pound dollar is from its moving averages. So we could definitely see a correction here on dollar CAD. Certainly to the 102 level, but also then keep in mind that we have this nice support area right around 101. So a solid move lower could be in the offing on dollar CAD, which would usually suggest dollar weakness, but hard to say. CAD's been different than the other dollar pairs of late, so I'd be more hesitant to read into the usual correlations with dollar CAD because it's been trading a little funny. But definitely, just from a purely technical standpoint, it looks like we're due for a little bit of a pullback before eventually higher, and I think much higher. The question is how far the pullback will go. What else do I want to take a look at today? Take a quick look at Aussie CAD. So we had Aussie CAD has been choppy lately. It came up and tested. Great example of RSI divergence here as the RSI headed lower and price headed higher before a pullback. Positive data out of Australia has sent the pair higher despite this dip from an RBA statement. If you look at these 3 moving averages trading right next to each other, certainly any dips down to that range should be met with pretty solid support. The pair, though, frankly, has been fairly awful for trading since back in November. It's been just terrible. It's always best if a pair just isn't good for trading, even if there are just good setups there, it's just best to ignore it. There might be other opportunities out there that you would rather take advantage of. Euro dollar, let's pop out to the daily chart and take a look at euro dollar real quick for you guys. So we still have this head and shoulders formation. It still calls for lower prices. So sort of keep an eye on that going forward. Certainly, euro dollar continues to look weak despite rallying about 150 pips or so from its lows. It just may be a question of what's next. Certainly, the possibility. I've been seeing this a fair amount lately. This head and shoulders will turn into the head of this head and shoulders, with this being the left shoulder, the head, and the right shoulder. And that, of course, would forecast to move really back down to the 126 area. So definitely keep an eye. We could easily see rallies back up to 133 to form out the formation before really just a collapse lower from 133 down to maybe 125, 126. So that's a possibility to keep in mind. Really, for euro dollar to turn bullish again, it needs to clear 133, 134 and stay up there. It's much easier. It's going to be much easier to short euro dollar than buy euro dollar going forward, at least long term, technically speaking. All right, I hope that's helpful. Good luck the second half of the trading week. Feel free, as always, to post any questions you may have in the chat room, and I will talk to you guys soon. Cheers.